Hello everyone, welcome back. I'm Lenny, and this week's module will be focused on opening and maintaining a checking account at a bank or credit union in the United States. You may watch this video as often as you like. You should watch the video before our in-class sessions. This will help you to prepare for class. By participating in this class, you are taking an important first step to building a better financial future for you and your family. Before we begin learning something new, let's review what we discussed in class, an introduction to banks in the United States. In class, we discussed two types of financial institutions, banks and credit unions. Do you remember why it is important to keep your money in a bank or credit union? The first is security. Banks are insured by the FDIC and credit unions are insured by the NCUA. Both protect your money up to $250,000. The next reason is convenience. You can get money quickly and easily. The third reason is cost. Banks and credit unions are cheaper than check cashing services at 7-Eleven or Walmart. The fourth reason is safety. Your money is safe from theft, loss, or fire. The fifth reason is your financial future. You can establish a good record of paying bills, you can save money for the future, and you can get a loan from a bank or credit union. The last reason is savings. You can prepare for emergencies or unexpected expenses. Okay. Now that you have decided where to open a bank account, let's begin the discussion of opening and maintaining a checking account. There are four primary benefits of checking accounts: convenience, cost, better money management, and safety. Checking accounts are convenient because they provide you with quick and easy access to your money. Paychecks, income tax refunds, and public assistance benefits can be directly deposited into your account. Direct deposit means that rather than receiving money as a paper check, the money is electronically deposited into your bank account. It is faster than being paid via a paper check, and you have immediate access to your funds. With a checking account, you also have the benefit of using checks and debit cards to make purchases or payments, rather than carrying and using cash. This can reduce your risk of losing cash or having it stolen. Banks and credit unions are usually much less expensive than other services, such as check cashing services or buying money orders. Checking accounts can help you better manage your money. Using a checking account can help you manage your money if you regularly record or monitor your transactions. Checking accounts also provide safety. It is safer to use checks and debit cards than to carry large amounts of cash. Additionally, you can limit your financial loss if you report lost or stolen checks or debit cards to your bank as soon as possible. Opening and maintaining a bank account is not as difficult as you might think. There are four basic things that you have to do. You have to open the account. You have to make deposits and withdrawals. You must record interest and fees. And you must keep track of your balance. Simple, right? In order to open a bank account, you will need at least a small amount of money. You will also need 2 forms of ID to prove who you are. The bank wants to make sure that you will be a responsible bank account customer, that you are who you say you are by verifying your identity, and that you are able, under the law, to open a bank account. Acceptable forms of ID are unexpired passports, birth certificates, consular ID cards, government-issued ID cards, driver's licenses, ITIN numbers, or refugee asylee I-94 forms with photo. You will also need to prove your place of residence using a utility bill with your address. Lila must decide where she wants to open an account. She can use a bank or a credit union. Lila decides to go to one bank and one credit union and collect information. She asks each institution the following questions. Does the bank offer the services I need? Are the branches and ATMs convenient for me? What are the bank hours? Do any employees speak my language? Is the bank or credit union insured? What are the requirements for opening an account? What is the minimum balance to open a bank account? What fees will I be charged? Is a debit card available? Lila decides to open an account at the credit union. Though access to the credit union is not as convenient for her, the credit union offers lower fees, online banking, and direct deposit. She can also get a debit card, which makes purchasing and accessing her money easy. Once you have determined where you want to open your account, and you open your account, there are important terms that you will hear. Deposits, balance, withdrawals. A deposit is money you add to your account. When you add money to your account, you must fill out a deposit slip. A deposit slip tells the bank how much money you are adding to your account. If you deposit a check, you may not have immediate use of all the funds. The bank must make sure there are funds at the originating bank to cover your check. You should ask the bank when you can use the money you deposited. Deposited checks may be partially available. The bank may allow up to a certain amount of the deposited check to be withdrawn immediately and hold the rest until the check clears, meaning the funds are all available for withdrawal. If you deposit cash, it is usually available immediately. The balance is the amount of money you have in your bank account. When you make a withdrawal, you take money out of your bank account. You do this when you write a check, give a teller a withdrawal slip, or use an ATM. A withdrawal slip looks similar to a deposit slip, except you use it to take money out of, rather than add money to, your account. You always need to know how much money is in your account, so you will not try to withdraw more money than you have. It is important to keep records of all the money you spend and the checks you write. Jane opens a checking account at the local credit union. On payday, Jane goes to the credit union to make a deposit. Her check is $350. She is asked to fill out a deposit slip. Once she deposits her money, she receives an invoice from the bank with her current balance. 2 days later, she uses an ATM to withdraw money from her account. The ATM does not belong to her credit union. She withdraws $60 and pays a $1.50 ATM fee. When Jane returns home, she writes down how much she took out of her account. She then checks her current balance. Before our next class, I want you to think about what is important to you when deciding where to open an account. Is it lower fees? Is it convenience? Is it having employees that speak your language? Look at the questions that Lila considered before opening an account. Be prepared to discuss these in class. See you next week!